Hi friends, welcome to the accountancy class. Today in this module, we are going to learn about how to calculate the amount derived from cash flow from operating activities. Cash flow statement is an additional information to users of financial statement. The statement exhibits the incoming and outgoing of cash. The statement assesses the capability of enterprise to generate cash and utilize it. Cash flow statement is a tool for assessing the liquidity and solvency position of the enterprise. Now we are going to learn about how to prepare cash flow statement. The total transactions of a company can be divided into three: operating activities, investing activities, and financing activities. In preparing cash flow statement, first we want to calculate the amount derived from operating activities. The second step is calculate the amount derived from investing activities, and the third step is calculate the amount derived from financing activities. After calculating operating, investing, and financing activities, add all these net amounts with opening balance of cash, bank, and marketable securities. Then you will get the closing balance of cash. This is the method for calculating or preparing cash flow statement. Next, we are going to learn about how to calculate the cash derived from operating activities. Operating activities are the activities which relates to current assets and current liabilities. There are two methods for calculating cash flow from operating activities. They are direct method and indirect method. Under indirect method, first we want to calculate or compute the net amount of net profit before tax and extraordinary items. For that purpose, first we want to take the difference of profit and loss account credit balance, then add the following items. First one is amount transferred to any reserves. It may be general reserve, sinking fund, debenture redemption reserve, capital reserves, etc. Then add the closing balance of provision for taxation, final dividend, interim dividend, etc. Then you will get the net profit before tax and extraordinary items. Then second step is add all non-cash and non-operating expenses. Non-cash and non-operating expenses includes depreciation, goodwill written off, patent, copyrights, mining rights written off, then discount on issue of shares, premium on redemption of shares, then loss on sale of machinery, premium on redemption of debentures and preference shares, interest paid on debentures and long-term loans, loss on sale of fixed assets and investments, patents and trademarks written off, dividend paid, etc. Then deduct non-cash and non-operating incomes. This non-cash and non-operating incomes includes profit on sale of fixed assets and investments, interest received, rent received. Then you will get the net amount, that is operating profit before working capital changes. Next, we are going to make the adjustments of working capital. Working capital means current assets minus current liability. After getting operating profit before working capital changes, next step is to make the adjustments of working capital. The rule for recording this transaction is add increase in current liability and decrease in current assets, then less increase in current assets and decrease in current liability. After making the adjustments of working capital changes, then you will get cash generated from operations. After getting cash generated from operations, next step is deduct income tax paid during the year, that is current year. Then you will get cash flow before extraordinary items. Then if there is any extraordinary items given in the problem, make the adjustment of extraordinary items, that is, deduct that amount from cash flow before extraordinary items. The net amount derived from this activity is cash flow from or used in operating activities. The equation for calculating cash flow from operating activity is earnings before interest and tax, that is, net profit before tax and extraordinary items, minus changes in working capital, plus depreciation, that is non-cash expenses, minus taxes, etc. This non-cash expense also includes depreciation, goodwill, patent, copyright, and any other intangible assets written off, loss on sale of machinery, discount on issue shares, then any amount transferred to premium, redemption of debentures. Changes in working capital means increase or decrease in current assets and current liabilities. Earnings before interest and tax means net profit before tax and extraordinary items. To get earnings before interest and tax, first we want to enter the net profit after tax, then add any amount transferred to reserves, provision for taxation, interim dividend, final dividend during the year, etc. These items should be added with the net profit amount. Then you will get earnings before interest and tax. If there is any non-cash or non-operating profits given the problem, that is profit on sale of machinery, rent received, commission received, dividend received, etc., these items should be deducted from the net profit for calculating cash flow from operating activities. Thank you.